Good evening. This is Lindsay Kruep, and I'm going to do my presentation for the finance class. I'll start with the economic forecast. As I stated early on in the class, that I do believe that unemployment rates will remain to go down slowly throughout the year. I do believe interest rates will continue to grow as the economy grows at a steady pace, where people get more confident in their spending and that we're going into a recession. With that, I do believe the housing market will slowly remain at a pace where things remain good for both the buyer and the seller. But I don't see any decreasing at all this year. Stock prices will probably fluctuate just like always. You never really know what they're going to do, as they're unexpected. And I do feel like with the current administration and what they're working on, that they're going to ensure that we go into a recession and stay in a recession. So that is where I feel the year is going to go. So doing my risk profile, I am at a 20, so which is considered below average tolerance for risk. So due to that, my portfolio asset allocations will be on the moderate to moderate aggressive side, mostly with heavy bond allocations as opposed to funds that are heavily in stock. For example, the three funds that I had chosen are the Vanguard Total Stock Fund, the JP Morgan Government Bond Fund, and a Fidelity Freedom Index Fund. And those are all in line with my risk tolerance as well as the forecast. They all have a risk level between 3 and 5, which ranges from lower moderate range to higher moderate aggressive. They all have been classified as good investments for those who are wishing to invest long term, which would, in my case, is going to be 10 years or more. I'm not one of these investors that's going to put a lot of time in constantly selling and buying stock. I'm obviously, with my low tolerance, that I would prefer something that's safe and can give me a decent return, that I know I can stay with it for a long time. But also, I don't think I'm missing out on anything by not going with a heavier stock allocation. So as far as the market efficiency and the investment philosophy, I do feel like we'll never really be able to outsmart the stock industry or the stock market. I believe that there are so many unknowns that really nobody really knows to a science. I think they try the best that you can, but at that point you're just guessing and hoping for the best. With my risk profile being so low, it has definitely shaped the way that I look at investments. I don't feel that myself would ever have enough knowledge of the stock market and the way it works to be able to be fully comfortable with me investing in anything that is too high risk. I love my money too much to be able just to see it go away in a matter of seconds if something were to happen to that profile or that stock that I had purchased. I prefer to stay on the safe side of things. My investment objective. So my goal is to increase my original investment by $900,000. So taking my original $100,000 that I was received in investment and bringing it up to $1 million. My timeline would be obviously longer term. So most of my investments, as I stated, was something that is only really beneficial for longer term, which would be 10 years or more. So my end goal would be basically my retirement age of 65. So I am 35 now, so it would take me 30 years to get where I needed to be. And my target annual return would be about $40,000 a year that I would have to get back to be able to reach my goal by the time I'm 65. My asset allocations with the investments that I have chosen, they are heavily allocated with fixed income and government bonds. I wanted to pick funds that I knew wouldn't be heavily weighted on stocks or cash. I'm a long-term investor, like I've stated, so not looking to really make a quick sale today or tomorrow. I just want to be confident in what I'm investing in, that I can keep for a long time and know that I'm going to be safe for that long of a time. So whenever I do retire, I know that I have that money and I'm not always in fear that I am going to lose everything I have. Okay, so the profitable industries. So I feel that the two most profitable industries for this year would be healthcare and the real estate industry. The healthcare industry will always be high thriving for obvious reasons. If there's people, there's a need for healthcare. People are going to get sick. People are going to be born. There's never going to be a situation where you're not going to need healthcare for any reason. So on the other side of things, the more drug trials they do and discover more cures for illnesses, this will keep the drug companies profitable, etc., which drives up stock prices and so on and so forth. Real estate. So I feel the real estate industry will be a good investment since it covers all different areas of real estate. So for example, commercial, residential, etc. As long as the economy keeps going the way it's going and more people are confident and that they're not going to lose their jobs and things like that, then they're going to start investing in things like homes and properties, vacation properties, etc. So I do feel like that is a good investment for some people. And I also feel like it's a buyer's market and a seller's market, like I said before. So I do feel that real estate as a whole is a good industry to either be in or invest in. The individual securities that I have chosen. So for the 5 individual stocks, I chose the Aetna stock, the Avid Bioservices stock, the Baxter International, the Enos Incorporated stock, and the RS Commercial Real Estate Corporation stock. And the reason why I chose these 5 is because they all had a low debt to equity ratio. So that means that they have more equity than they do in debt risk. So that is huge for companies and when looking at an investment to make sure that your company is not going to basically go belly up because they cannot afford the debt that they have. All of them have above average return on asset ratio, which is huge. And then return on equity as well. So a lot of them have higher return on equity ratios as well. The 3 individual bonds that I have chosen would be the JP Morgan government bond, the double line total return bond, and the Vanguard short-term corporate bond. The ratings for these are all average to above average for the risk rating. None of them have a coupon rating, and the current ratio on most of them would be pretty decent. The JP Morgan has a slight less current ratio than the other two, but I feel like with the other factors in play that it wouldn't be so terrible. And then the 2 funds that I've chosen are Fidelity Freedom Index Fund 2020 and the Vanguard Total Index Fund Investment. The standard deviations on both of them are above average. They're in between the 10 to 18 range. The fund compositions on both of them would be mainly of the non-U.S. stock and cash. And neither one have initial fees or the 12B1 fee. and their Sharpe and Sortino ratios are about the same. They are low on both. And also, I just wanted to touch base again on the reasoning for my economic forecast. So some of the indicators and factors that go into forecasting the economy are the unemployment rate, the consumer confidence, the stock market, retail sales, and housing market. So that was pretty much how I came up with my forecast, because I feel like all of these things are doing extremely well right now, which indicates that we are going into recession, and we don't really see us going in anywhere but up at this point, with all of these factors that are being considered. So, for example, the unemployment rate, it is actually going down. So as Trump stays in office, and the more he stays in office, he is providing more jobs for people. So that in turn, I feel like makes people more confident that one, they're going to keep their job, and that there is jobs available if they were to lose it, so they can spend more money as far as, vacations and things like that, which will boost the economy even further. And so, in conclusion, since all my investments are of low risk, I do not see the need to have a turnover in assets. My investments are not heavy in stock, as I stated, so there really will be no need to fluctuate much in, which would force me to change any of my investments now. My investment choices are long term, so I'm kind of in it for the long haul. So I'm not here to, again, buy today, sell tomorrow type thing. I want something that I, can buy and not have to worry about till I retire type thing. Maybe that makes me a not so smart investor, but in my mind anyway, it makes me smart, because I feel like I'm not just throwing my money away, because I don't think I'm in a place where I have the luxury of losing several hundred thousands of dollars at once and trying to recoup all that money. So I'm just more on the safe side, as opposed to probably, I guess, a smarter investor. And that is it. I appreciate your time, and this course definitely taught me a lot, and that's it. Have a good night. Thank you.